All right. We're getting ready to rock and roll. Here we go. First and foremost, as you all know, the markets have been flushing like a toilet today. And as though we already knew that that was going to happen, right? Because you've been following me for a while and you know that I have a whole bunch of put options. And I also have, I told you, over $200,000 in a short position on the Qs right now. So everybody laughed at me when I bought those $200,000 short positions, but they're not laughing today. So there you go. So there you have it. You come and hang out with me at this class, you can know why I do that kind of stuff. And been doing this for about 40 years. I have a little bit of history under my belt, and been teaching at the university now for almost 20 years, this stuff. And got my, probably, I guess you could say, my formal education at the Chicago Board of Trade when I was there for about 10 years. I hung out at that location and worked with all those people out there. And of course, I was an instructor there. So I taught people how to trade, not to trade. I taught people how to trade using computers. And then, of course, I was teaching real traders, the ones that came off the floor, how to use computers. And so they taught me how to trade. So I learned how to trade back then. And now I just spent the rest of my life trading, of course, and teaching others how to do what I learned. And that's why I have over $250,000 in short positions on the market right now. And so, although I do have some long positions as well, my position in the stock market is basically what we consider to be a neutral position. So, although my portfolio shows that I'm losing a little bit right now, as time goes by, the dividends will pay in, and the profit from the put options will pay in, plus my profit from the short position will pay in, and it'll just be neutraled out. So not losing anything. I kind of got my insurance policies put in place to protect me because I had a high probability, right? That's what we work off here in this class. High probability opportunity to get in here on a short position because we had high conviction that the market was going to retrace based on our mathematical models. And if you would like to learn those mathematical models, go down there and subscribe and come back and hang out with me. I also teach down at the university. And of course, this class is primarily the lab for the university classes that I teach. And so most of the students who are here with me today are university class students. And so I appreciate you guys hanging out, showing up. This is kind of a dead week. We don't have classes this week. We just finished up a series of classes last week and a little course, and we're going to start up another course on Monday. And that's going to be a real important one because that's kind of the follow-up to the granddaddy of the one that we taught last time, and finish out that strategy, that pairs trading strategy. So I want you guys, if you're here in the local area, to go down there and get signed up so we can teach how I did all of this pairs trading stuff in the stock market. All right. But today we're going to do a little day trading. Today is our day trading day. And so we're going to come in and we're going to do day trading in the stock market. As you remember seeing the little marquee out there. So we're going to do this one right here. We're going to do the scalp and trail. All right. So scalp and trail, my day trading strategy. So we're going to go in. That's what this is. This is power hours, last hour of the day. And usually on Wednesdays, I like to come in here and do a little scalping and day trading for my day trading class. Now, I haven't taught the day trading class yet this semester. The day trading class for this semester comes up in about 3 weeks, 3 or 4 weeks, I guess. It's the first or second week of March. So we teach the day trading class and the technical analysis class back then. They kind of go hand in hand with each other. So we're going to be doing that one. And so looking forward to that one. But right now we're going to go in. This is for the previous class that we taught not too long ago for the day trading class. We're going to do the scalp and trail strategy today, and we're going to go through and we're going to example it. And so I'm going to show you the settings and the software that I use, and then you can go and you can do that, get your software. And here's the software I use right here, just real quick.
Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, so that's what we're going to do today. We're going to show you the settings that I use for scalp and trail. Now, the name of the game when scalp and trail. Scalping, the kind of trading that I do is just short-term trading. That's what we're going to show off today. We're not going to get in. We're not going to hold our position for the whole day. If we do that, I like to do it with options. And again, we're going to teach an options class. We'll do day trading with options. That's coming up in March, February, March. So yep, we can teach that down at the university. And there's a class that you can sign up for options. We're going to show you how to trade options. I like to day trade. Now, I like to break those two concepts in half. A lot of people just call it day trading, and they say, "Oh, I'm a day trader. I'm a day trader." And then, they say, I don't know, what kind of day trader are you? There's lots of different ways to day trade. One is options on day trading. I like to day trade with options. A lot of people, you'll hear that out there called 0 DTE, 0 days till expiration options. But I like to sell options, not buy options when I day trade. So it's a little bit different strategy. We can play with that, and we'll learn that next month. But this month, we're going to do the scalp and trail strategy, which is really nice, really fun. It's a good strategy, simple and easy. And if you have the right tools, if you have the right software, otherwise it's kind of a pain and it's hard. So make sure you get the right software, the right tool, the right job. If you're going to do this, make sure you treat it like a business. Don't just kind of half-ass it, because these guys are out here ready to take your money. They want to take your money. And if you come in and you sit down at the table and start day trading without the right tools and the right knowledge and the right experience and knowing how to do what it is that we're doing here, they'll just take all your money. And that's what they're just sitting there waiting for, little trolls that don't know what they're doing to come in and take your money. Now, you might win once in a while, but overall, over the long period of time, usually new traders that don't have the right tools, they don't know what they're doing, they're just kind of hacking at it, they end up losing their money. Now, I like to come in and I like to day trade in the futures market. Now, for those of you who are not aware, there are two exchanges that we basically trade here in the U.S. One is out of New York Stock Exchange. Well, there's three there primarily. There's the New York Stock Exchange, right? There's the NASDAQ exchange, and there's the American exchange. Those are the three big exchanges out of New York City. Now, there's some other smaller futures exchanges, and there's some, OTC, and I'm not talking about those guys. All right, we're not penny trading. So we're just trading on exchanges. So those are the three big exchanges. Those are the ones that we trade stocks on. And when you have track and trade, you have the track and trade version of the software. You're like, but Lan, I heard about this software. My software trade platform does both. I can trade futures and I can trade stocks out of Chicago, the futures market, and I can trade stocks out of New York. Well, if you want to kind of put your peanut butter and your chocolate together, you can do that. I don't like it. If I'm going to trade futures, I want a futures platform that was designed just for futures. There's enough difference there that you don't want to mix those two. All right. Contracts expire. There's all kinds of stuff that happens over in the futures market that doesn't happen in the stock market. So if you got one software program that tries to do both, it's just kind of a mess. All right. So I recommend if you're going to trade in the futures market, you have a futures trading platform and a futures trading account. And if you're going to trade in the stock market, you have a stock trading. Don't go and do one of those Walmart things where, we just do everything. You can come here and you can get your chicken and you can also buy a pair of pants at the same time. All right. No, we're not going to do that. We're not those guys. All right. We're not those guys. All right. We're going to be the guys that are professionals. We're going to have a trading platform for each exchange and for each purpose. One is for the futures market. One is for the stock market. If you're going to trade stock market, you want a stock trading software program. It's designed for stock trading. You're going to trade the futures market, you want a futures trading platform. It was designed for the futures trading. We're not going to go down and buy a Walmart platform that just does everything, because you're going to buy your shoes and your steak at the same store. All right? We're not that guy. Not when we're going to run our own business. We're going to risk our own dollars and our own money. Okay? Just my little rant and rave there. All right. Personal opinion. You can go be a Walmart guy if you want to. I don't care. I'm just showing you what I do. I'm not here to tell you what to do. Just here to show you what I do. Tell you what I do. All right. And so this is what I do. Now, what I do is I come in, I have this one here. This is the futures version. All right. So it's designed specifically around the futures. And one of the things about futures is that we have all the commodities that are available to us to trade in this list. We don't have to worry about all the stock market crap that's being all mixed in there together. All right. We don't need that. So what we have is we have portfolios in here, and we can create portfolios around our specific stock portfolios that we want. We have a list of stock contract or futures contracts, and we also have all the expiration dates over here because futures trade differently than stocks. And so you need to have more controls over what's going on. You need to have that extra understanding of how things work. They don't work like stocks. And so if you throw it, oh, I'm going to just trade the futures market in my stock program, well, you're going to get all confused and your brain's going to go bonkers. All right. So that's it. I've ranted and raved a bit on that enough. Here's one more time.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, so that's what we're going to do. I'm going to show you my settings. Now, if we're going to scalp and trail, I like to scalp and trail. Not that you can't scalp and trail in the stock market. You certainly can, and we're going to do that too. Not today. Today, we're going to scalp and trail in the futures market. And the reason is because we have exchanges. We have the 3 big stock exchanges out of New York. We also have a couple of big exchanges out of Chicago. Now, the Chicago exchanges are different. They're different than they are in New York. All right. They're futures. So in the futures market, we're going to use a futures trading platform to connect to Chicago. We're going to use our stock trading platform to connect to New York. And we're not going to try and meet the two in the middle. So we're going to use the futures version of the software, and Track and Trade is the one that we're going to use. All right. And so I'm going to show you my settings. So if you haven't got your software, go get your software. Of course, now if it's too late, just kind of watch, and then you can come and rewatch this program. I'm going to show you all my settings on how to do scalp and trail. Now, there's one thing that one myth that I want to throw out. And I'm going to do the Donald Trump weave. We're going to come back around. The reason I was talking about there being two different or breaking apart the concepts of day trading versus scalping, a lot of people just call everything day trading. Oh, I'm a day trader. I do day trading. And then they'll go in and they'll scalp, but they'll call it day trading. And then some people will be scalping. Oh, I'm a day trader. And then what they're really doing is day trading. They're not scalping, because they just use the one term, universally. And that's okay. There's nothing wrong with that. It's not very granular. It doesn't tell us what you're really doing. All right. So when you're scalping, what's the difference between, I like to break all these things down so that we're all on the same page. When I say something, you know what I'm talking about. If I say day trading, you know what I mean. If I say scalping, you know what I mean. All right. So scalping is when we trade real tiny, small trends. All right. So let's go down to a very small trend in the market. First thing I want to do is just talk about the NASDAQ. This is the NASDAQ. Of course, we know it's very tech heavy, and it's flushing like a toilet today, which is why I put on $250,000 to a short side. So I'm happy today because it's making a lot of money. It's covering my long positions that I have. All right. It's helping me. It was my hedge. And so it's a little insurance policy I put on there, $250,000. Now, doesn't mean that I want this market to flush and fall. I certainly don't. It was just an insurance policy to protect my positions that were long, and it's doing its job. Okay. So I also have a bunch of options. Of course, the options need to pay off over a period of time. So if the market stays down, then it'll pay off even better. And if a market turns and goes back up, well, my insurance policy is still there, but I can get rid of it. So that's the name of the game. And then I can buy some more, buy lower. And so that's how you do it. You kind of hedge yourself when you're creating a portfolio. But we're doing that over in the stock market. Now we're doing a little day trading. So day trading, we don't hold on to it forever, right? Obviously, day trading means we're going to be out by the end of the day. Or if we're going to scalp, we might only be in there for a few minutes. All right, so we're going to do scalping today. Now, it doesn't mean we can't do scalp and day trade at the same time, which is why I'm going to combine those two. That's why I call it scalp and trail. All right, scalp and trail. So that's what this little icon right here is trying to tell you, is that we're going to do both. We're not going to just do day trading, right? We're going to do scalp and trail. So trail is the day trading side. Might be in there a little bit longer. It's still kind of a scalping strategy because we're not going to stay in there all day unless the market trends up all day, and that would be okay. And then we're going to scalp. So we're going to scalp it first, and then we're going to trail. And if the market keeps trailing, we're going to scalp along the way. All right, we're going to scalp along the way. So we're going to try and enhance our trading position. Now, for us as traders, we're going to let the computer do most of the trading. All right, we're going to set the computer up, and that's the settings that I'm going to show you, so the computer can actually trade for us. The one thing the computer is not good at is deciding when to pull the trigger. Humans are a little bit better than that. And you say, but Lan, what about AI? AI is going to beat everybody. That's a bunch of bullshit. You know what? The AI is just a computer. And we've been trading the stock market and the futures market. We've been trading the markets with computers for 40 years. As long as I've been sitting in these chairs trading, pushing the little mouse button, there's been computers that have been out there trading against me. And there's going to be computers. There's always been computers. And AI is just another computer. Oh, I can trade back. Oh, I saw this guy. GPT's winning. It's just a computer strategy. It's nothing special just because it's Chat GPT. All right. Chat GPT is running a computer script that somebody made up, told it how to trade. You can do that without being Chat GPT, and it's been done forever. And the track and trade software does it beautifully. All right. It's already here. It's been around forever. It's nothing new. All right. So, Chat GPT is going to put the stock market out of business. We're all going to go, I can't trade anymore. Well, if that were the case, we'd have been out of business 40 years ago because there's been computers trading it for 40 years. All right. So scalp and trail, my trading strategy. The AI systems are not going to put the stock market out of business. Okay. Promise you. Okay, so here we are. We're going to come in here, and this is the daily chart. And you see the market's flushing like a toilet. That's really awful. Everybody's jumping out of windows right now. There's some other markets that we could go look at really fast just before we jump in and show you all the settings. I want to show you just something here. We're going to come over to the stock market version too. This here is this is Hood. This is a really good stock. It's been a really good stock for the last year. This is Robinhood, the little trading app. This is that company. They went straight up. They went into a little head and shoulders formation, a little topping form, double top, little lower high. What do you call this? A 1, 2, 3 pattern. Down it goes, little ABC pattern. It's coming down here, down into the Delta Kona probability. If you don't know what the Delta Kona probability is, go watch my video from yesterday. Was it yesterday? Today's Wednesday, Tuesday. I think it was yesterday morning. So go watch my video from yesterday morning. Very good video, very important. We learned all about the Delta Kona probability, why it's so important. And the market is coming right back down into what I call the Fibonacci sweet spot, or the one standard deviation, the Delta Kona probability. Look at that. It came right down like a train on rails to 61.8. And that's not the only one that's done it. Okay. And then we kind of knew this was going to happen, right? We've predicted this. How did we predict it? Well, just like we always predict the markets. We use the Wyckoff accumulation distribution model to help us identify and decide when that's going to happen. And I just wanted to show you guys, because we talked about this yesterday morning, and this was our Wyckoff accumulation distribution model. We were looking at Apple in that class, but this is Hood. Look at this. Accumulation went up through the ABC patterns right up through here, made the little double top right there, came down the other side, made this pattern here, and now we're right down in here. This is where we're at. Okay. So we're going to anticipate it's just going to, if it's been this much like a train on rails going through this accumulation Richard Wyckoff accumulation distribution model. Now, I didn't draw this before class because this did this. I didn't even draw this. This was drawn 30 years ago by Richard Wyckoff. All right. And so this is why you need to know the Richard Wyckoff strategy. And I teach it here. You can go out and get my book on Amazon. Just go look in the notes below. It tells you. Just go search Lan H. Turner. And all this stuff is taught to you in my book. I got a book on Amazon. You can go buy it. It's the manual to the class. All right. Or you can go over to Pitt News Magazine and you can get it, pittnews.com. Go into the store and you can get the digital version for half the price of the one on Amazon, which is the paper version. All right. So you can get that book. All right. So all this stuff is taught in here. And then of course, subscribe to the channel and you can come back here and learn about how this is all done. So this is really no surprise to us that the market did this. We've been showing this little pattern. We've been following along. There's lots of charts that do this. Let's come in here. I'll show you. Here's Microsoft. Here's Microsoft's pattern. It's the same thing. You go through the accumulation stage, you go through the rallies, you go through the double top right up in here. And the market flushed down, and where we're at right here, we're down here in the reaccumulation stage. Now, the question is, because we got two of these models, the question is, are we going to turn the whole stock market into a bearish market? If we do, then we're going to have to look at this other accumulation and distribution pattern. So you'll notice I got two of them here. And one of them only goes halfway back down, and the other one goes all the way back down. See that? So this one goes all the way back down to the reaccumulation here before it goes up. Or this one actually go down, it can go up, and then it can go only halfway back up and then turn around and go down again, and you get a bear market. All right. So if we go into a bear market, this is what it looks like. This is the basic map of the market. Okay. And then this is the map of the market on a bull trend, because it only pulls back halfway back into the Delta Kona probability, right? The accumulation zone. And then it starts to rally once again. I think this is what's going to happen. I think the economy is really strong, and unless, of course, Donald Trump loses the ability to do tariffs. If the Supreme Court comes back and takes that away from him, I think we're going to be in trouble. sell everything, just run for the hills. All right, because that's the only thing that's saving our sorry asses right now is his ability to do that. And if the Supreme Court comes in and says, sorry, you don't have the right to do tariffs the way you're doing it, our whole economy is going to fall flat on its face, and we're going to be running to the south border. And you know who's going to be locking up the doors? It's going to be the Mexicans, and they're going to use that Trump wall to keep us out. It's going to be a different story, right? They don't want us in Mexico. They're going to use the Trump wall to keep us out of Mexico because we're all going to be running that direction. Okay. So this is the two models that we're working off of, and it's all based on this slides right here. And we've talked about this. This is just a summary of what we did yesterday, so I'm not going to go into it in great detail. I want you to go watch that video from yesterday. But this is the delta cone of probability. Now, do we use this when we trade day trade? Yes, we do. Okay, because we have the delta cone of probability. So the market's going sideways like this, and when it breaks out, we look for it to break out, go up into the 1 standard deviation, the 2 standard deviation, the 3rd standard deviation, then return to the 1 standard deviation again. So that's what this market has done. Is it's left the standard deviation and it's gone up into the 2nd, 3rd standard deviation up in here. That's why it's returning back to the 1st standard deviation, or what I call the one standard deviation, or the Fibonacci sweet spot. Okay, and we got this spot right down here. We're watching it too because it could come down to 78.6. That's the 3rd standard. That's the 2nd standard deviation on the way down. This would be the 3rd standard deviation on the way down. So if it breaks through this circle right here, which is the 1 standard deviation, come back down to the 2nd standard deviation, come back up into the 1 standard deviation again. So we're watching for those probabilities to occur. All right, that's what it is. So, NVIDIA doing the same thing. I mean, I could pull up that same thing. We could go through all these stocks, and you can see they're all going through this same model. So they all went to the accumulation stage down here. They all went up through the big rally, the double top up in here, and now they're flushing back down to the 1 standard deviation. So we're going to expect this market to come down a little bit farther. Sometimes you get a really strong market, Palantir, some of these other markets, but Palantir's coming right back down to it too. So sometimes they don't like to come all the way back down into the 1 standard deviation. They'll come down to 38.2 and bounce and go back up. So we'll see. Some of these markets might be strong and be able to hold off the 1 standard deviation, but most of them, this is a self-fulfilling prophecy market. So as I mentioned before, computers have been trading this thing for forever. And so the computers are the ones that make this do this, right? I mean, the computers do this, the big banks and hedge funds. That's how we have a model like this. Well, how do we have a model like this that works so consistently over time? Well, it's because they're all being traded by computers, and this is the model that they run. Buy low, sell high. They need the market to come down, buy low. That's what they do. They let it flush. They take all your money, and then they turn around and put it in their pockets, and then they go back up. All right, Palantir is another one that we all love and adore. And here we are. This is where this market's coming down, flushing down. This is where I bought my put option to protect myself at this level right here. So a couple put options in my long position. So this is being all covered by my downside potential. All right, is being covered with put options. So if this market keeps coming down, I'll just keep making more and more money on my put options. I hope it turns, and I don't want to see it go down. I want to see it go up. I got long positions in there, and then I can peel off my hedges and remove those, and the market go up. We'll make a lot more money that way. All right, so that's the whole idea, but it's coming down into this region here. I don't want to see it, obviously. I don't want to see it come all the way down to the break out the 1st standard deviation to the 2nd standard deviation on the downside. I'd like to see it just come in here, start going in, go through a reaccumulation stage, which will give us the opportunity to buy into this market, put some additional shares on, and then have this market take off and go to the moon again. That's what we're looking for. Okay, so that's the name of the game. That's how we play it. And as I always say, the stock market is just it's a game. It's a board. It's like a board game. All right. And these are the guys that you're playing against, and they already know all the rules to the game. You have to know the rules of the game and whatever game you're going to play. And there's a lot of games in the stock market that you can play, but you need to know the rules. And one of the rules that we're going to deal with, and the reason I like to not day trade in the stock market and day trade over in the futures market, is because we have different rules. And the rules are that there's no pattern day trading rules over in the futures market, like in the stock market. So you don't need to open up your account with $25,000. No, over in the stock market, if you want to day trade, you have to have a minimum of $25,000 in your account. If you drop 1 penny below it, you can't day trade. So you can't just open your account with $25,000, because if you day trade, make one trade that drops you below $25,000, you can't day trade anymore. So you have to open it up with like $30,000 so that you can day trade. Okay, so that kind of puts a barrier to a lot of people who want to day trade in the stock market. Can't do it. So you have to come over here to the futures market. The futures market is a better place to day trade anyway. There's no pattern day trading rules, and we got what we call micro accounts that are little tiny ones, so that you can do some day trading over here And then we've also got some little bit bigger ones halfway. It's kind of like, a baby bear, mama bear, and papa bear. We got 3 levels on many of these funds that you can trade. And so some of these are little tiny funds that are designed for new traders that can just practice, but you're going to have to do day trading on those. But we like to go to the kind of the mama bear. That's where we like to scalp. So we're going to do scalping, which is really short-term trading. And then we're going to do day trading, which we might go down to the micro and then try and stay in longer. Or you can do day trading on the mini, just kind of the mama bear version, and use options. That's what I like to do. I like to use options. Okay, so we're going to come down to what we call a range bar 25. We're going to take a look at a range bar 25. And I got some indicators in here, and I got my chart set up in kind of a unique way. And this is something you're not going to see on very many other charts. You have to have basically a professional level day trading platform, retail day trading platform, to see this type of setup. So what we're going to do is we're going to come in. I'm going to show you. I have what we call Heikin-Ashi bars, and I also have range bars. So I have range bar Heikin-Ashi bars. Very unique, very weird, very new technology. That's not a lot of companies do this. Not a lot of software has this, and they certainly don't have it in the way that we do it. All right. So with this track and trade software. So we're going to come in, we're going to turn on Heikin-Ashi. Now in the software, you can right click on the chart. You come down here to chart overlays, chart properties, all the way down to your chart properties. Now you're going to find in here chart properties is right there. It's called Heikin-Ashi, and you'll notice it's the preferences tab. And the reason all the preferences are over here in the control panel on the right-hand side is because I hate stuff popping up on the screen. And so we put it all over there in that control panel so that we didn't have to have stuff pop up on the screen. Now it's Windows and stuff pops up on the screen. And sometimes you have to have windows that pop up on the screen. That's why they call it Windows. But we tried to eliminate that the best we can in places that we didn't have to. And so one of the places is in your settings. So you can come over here and you can turn on Heikin-Ashi just like that. And that's a Heikin-Ashi bar. I kind of call it the cheat codes. All right, cheat codes. We're going to come over here and we're going to look at a 1 minute chart, which is actually more common. 1 minute chart is the most common chart that most day traders trade on. And that's a 1 minute chart right there. It's pulling up right now. Hold on, hold your horses. It's downloading all the data for the 1 minute chart. There we go. So that's a 1 minute chart right there. And if I turn off Heikin-Ashi, you can see this is just a normal 1 minute chart. This is what most traders are looking at when they see a trading, when they're trading. They're looking at this kind of a chart. Well, that's, to me, that's hard to trade. Not that you can't trade it, but it's hard. It's hard to trade this because it's all over the place. So we turn on Heikin-Ashi. Now the way I do it in track and trade, see this little HA up here? This HA on my button bar has to be added because it's not there by default. So you right click and you say customize your toolbar on the little handle of the toolbar, and you come over here and you grab it out of this sidebar right here, and you just click on it and say add, and you push it over here. Mine's already over there, so I don't have to do it. But you can see you can just push it over there and put it on whichever. Now I got several button bars up here, and I have some tools duplicated. Just, I don't know, because it makes it easier to grab it. So I have Heikin-Ashi right there. So if I click on that, I don't have to right click and go into chart preferences and find it in here. I can do it here, or I can do it here as a little click button. All right, either way. So that way I like to do it up here. That way I can toggle it on and I can toggle it off. I can just turn it on and off because sometimes we want to turn it off, see what everybody else is seeing. Sometimes we want to turn it on so we can see what we want to see, which is the cheat codes. Now, what you'll notice about this is the 1 minute chart. You're going to notice there's a lot of hairy tops and hairy bottoms. All right, there's lots of topping tails and lots of bottoming tails. That's a tough market. Lots of volatility going on in there. All right, because of those markets going through a lot of volatility, it makes it hard to trade. So sometimes you have to hold your stop a little bit further back. Now, see these little green dots? These are where we're going to put our stop order. So we're going to get into the market when a market changes from red to green. And if it's doing nice, smooth reds to green, that's when we want to trade. If it's all choppy, doing lots of reds, lots of greens, lots of reds, lots of greens, like three, we don't want to trade. All right. So like I said, the computer will trade for you, but you need to decide when you're going to do the trading. All right. So you can sit here and watch this, and there's signals that come in. I mean, we can turn on the little ATR signals in here because this is what we're going to trade. We're going to trade the ATR, the average true range, which is laid over the top of the chart. So we have candlestick charts, and we have tick charts, or we have, in this case, we have 1 minute charts. We're going to go over to the tick charts. All right, we're going to go over to what we call the range bar charts. And then that's also a very unique thing. We're looking at 1 minute now because it's more common. You're more used to seeing that. And then we're going to have the Heikin-Ashi laid over the top of that. And then we're going to have the ATR laid over the top of it. All right. So that's kind of our basic structure that we want to have to set this thing up. So I'm going to come in and show you. These are my settings for my ATR. You can see over here, it's in the preferences tab, and you can just take your little camera, shoot a picture of that so you can make yours look like mine. You always want the ATR factor to be 1 when you're doing the scalping. Scalping is the little short-term trading. Day trading is the little bit longer-term trading. We're going to be doing scalp and trail. So we're going to be scalping, taking a little bit off, and then we're going to do some trail, try and see if we can't catch one of these big, long moves, all right? Well, nobody knows when those big, long moves are going to happen, but we're going to try and figure out when that's going to happen, and when it does, we're going to take those signals, and we're going to go, all right? And we don't always have to wait for a crossover like this. We can wait for the little red to green, red to green, red to green, right? First green candle to make a new high, bam, you want in, all right? That's the way you do it. If the markets are pumping and moving, if they're making lots of reds, lots of greens, lots of reds, lots of greens, lots of topping tails, lots of bottoming tails, stay out of the market. All right. So that's the thing you need to do. So that's why it kind of requires us as humans to come in here and watch this, because the AI system or the computerized system is going to take these signals, whether, you know, you have to kind of have this human filter. Maybe AI could do a little bit, you know, maybe AI could watch it. I don't know. I don't think it's quite there yet. Maybe. We'll have to see. But see how this is, see how smooth and beautiful this is back here. This is hometown money making stuff right here. This all the way, oh, beautiful stuff. See that? No topping tails, no bottoming tails, just lots of long, beautiful little trends back and forth. Just give me money, hand it to me, hand over fist. All right. That's just easy money. That was this morning around 9 o'clock. All right. So that's just the way you want to trade. And that's the best time to trade. Usually I don't like to trade the first morning, 7:30 in the morning, my time, 8:30 Central, 9:30 Eastern. You don't really want to trade that time frame because the market's just all over the place. This is really crazy and it's hard to trade. Now, sometimes it'll come out of the gate and it'll be okay. And we do that sometimes. But see, look at this. See, perfect example. Market opens up and look at how nasty that is, that right out of the gate. Really ugly. Lots of topping tails, lots of bottoming tails. See that? Really hard to trade this stuff. Market's just crazy and it's going fast. All right. So it's going really fast and it's moving hard and it's making you want it to kind of cool off and calm down. See it calm down right there, almost like it flipped a switch right at 8:44, 8:45. It's like boom, flipped a switch. And actually, even right down through here is a little rough. And it kind of flipped the switch right at 9 o'clock a.m. my time. So that's 10 o'clock Central and 11 o'clock Eastern. So about an hour before lunch. Look at how, oh my God. Can you see the difference? I hope you can see the difference. Because if you can't see that difference between what was happening here and what's happening here, then there's nothing I can do for you. I mean, you got to be able to notice the difference between those two markets, because this is when you want to trade, when the market's doing this. Now, is it going to always start trading at 9 o'clock our time, Mountain, 11 o'clock Eastern? No, but that's the best time, in my opinion, to start watching, because that's when it kind of, generally speaking, calms down and starts making the nice, flowy, beautiful, easy. And what we're looking for is these no topping tails. See that? No topping tails. See how it's all flat tops? Oh, we love flat tops. And flat bottoms. Oh, we love flat bottoms. Okay? Flat bottoms, no tails. You're in heaven. That's where you make all your money. Okay? Once it starts making topping tails and bottoming tails, you need to stay out of the market for a little while. But it's the switch over, the changeover from where it goes from red to green or green to red, because you can make money going down too, right? Remember, in the futures market, it's called the futures market because you can make money when the market goes down without having to own it, because you're going to offset it sometime in the future. That's why they call it futures. Did you know that? Because you can sell something and then buy it back in the future. So you can sell something that you don't own because you're going to buy it back in the future and pay for what you sold. So hopefully you buy it back in the future for less than you sold it for. That's how you make money. If you sell it today and buy it back at a higher price, well, you lose money. But they just let you do it. You're like, well, how are they going to let me sell something that I don't own? Well, don't worry about it. They let you do it. Why? Because they know you're going to buy it back in the future. Okay. So that's why stock market, futures market, a little bit different. Well, land, they let you do that over in the stock market too. Yes, they do. They let you short the market in some cases. All right. Most cases, there's a lot of stocks they don't let you short. All right. So it's kind of a basket of stupidity over there. So you want to short that one? No, you can't short that one. What about this one? Oh yeah, you can short that one. How come I can short this one and not that one? Well, it's because this one, I don't know. You got all these rules. Okay, don't forget, it's just a game, and the rules are that you have to know what the rules are. If you don't know the rules, well, you're going to get your hiney handed to you, right? You got to know the rules. And the rules are that over in the stock market, some stocks are able to go short, some stocks are not. Now, we could go into a great detail about why that is, but that's beyond the scope of this class, so we're not going to do that. All right, so just know that over in the futures market, you can go short on every single thing that's here. There's no, easy to borrow. You don't have to borrow. Why? Because they just let you sell something that you don't own, because it's called the futures market, because you're going to offset it sometime in the future. It's called going short. All right. But what we do is we just have to be right. That's all. We just have to be right. Is the market going to go up? We're going to buy. If the market going to go down, we're going to sell. And that's what you do first. If you think the market's going to go up, you buy first. All right. And then you sell later. It's easy to understand. If you think the market's going to go down, you sell first. And then you buy back low later. That's all. It's just sell first if you think it's going to go down. You buy first if you think it's going to go up. That's all there is to it. And if you can't figure that out, well, practice, because, practice makes perfect. So what we're going to do is you want to just look at, oh, my goodness, look how beautiful that nice little beautiful trend is. All the way straight down there, flat tops, all the way down to the green. And then notice the little dot, the little green dot crossed over right there at the right spot and turn around, start going back up the other side. Well, that's where our stop's going to be. Okay, so we have an entry position, an order that gets us into the market. We also have to protect ourselves to the downside in case we're wrong, because we're wrong sometimes, believe it or not. When we trade, sometimes we're wrong. We get in and the market doesn't go. I mean, nobody knows where the market's going to go except for this guy right here. Now, he knows where the market's going to go, and if he doesn't, you know what, sometimes he won't tell me, so I'll stab him in the neck, and then he makes the market do what I want. But that's about the most power that we've got, is a voodoo doll to know the future of where the market's going to go. So nobody knows where the market's going to go. So don't ever just get into the market and say, well, if it goes against me, I'll just stay in until it comes back. No, we don't do that. Never do that. All right. That's a bad move. So what we want to do is we want to immediately get out of the market if we're wrong. So we get in, and if we're wrong, we get right back out. That's called a stop order. Okay. So we get in with the order that gets us in, whether it's a stop order. That's a little bit advanced. Today, we're going to do market orders. And then we get out with the stop order, and the stop order trails on these little green dots. All right. And the little green dots, when it crosses in the market, crosses those little green dots, that's a signal to get in. We can get into the market. But we always want to make sure we know what the trend is. The trend is your friend until it bends or ends. Now, a lot of people will come in and they'll start telling you, when you day trade, when you do this scalping stuff. Now, I'm going to separate it. Scalping is the little short trends like this. If we try to capture this one little move from here to here, all right, that's a scalp. And then we're going to get out and we're going to capture this little trend from here to here. That's a scalp. If you try to get in here and ride it all the way to the bottom, well, that's a day trade. Okay, so let's get this straight. Are you going to day trade or are you going to scalp? If you're scalping, all you're trying to do is taking this one little red trade and this one little green trade. You're going to kind of sit through here. Hopefully you don't lose any. And then you're going to take that red trade again. All right. And the trend is your friend. So the trend is down, but it has some greens. We generally don't like to trade the greens in a downtrend. If most of the long bars, long trends are red, and then we have some short green ones, well, we don't like to trade the green ones until we start getting big, long green ones. All right. So we get a long red, short green, long red, short green, long red. So it's red, or green. And you're going to get some little pullbacks in there. So that's the trend and the counter trend, whether it's down or up. It's the counter trend. The counter trends are the short ones. The trends are the long ones. We want to be trend traders. So we don't want to trade the counter trends because they oftentimes don't move far enough to make enough money. They move, but then the stop order doesn't have enough time to get up there to lock in some profits before it turns and starts to fall again and goes back into the trend. So for us as beginners, you don't want to trade the counter trend. Once you get a little bit more advanced, you can trade those counter trends if you would like to, but you got to be smart about it. And you got to take your profits before those trailing stops get up to the point, because you're like, well, I'm in a counter trend. I'm going to try and take it anyway. Do the thing that Land said not to, because you're getting a little bit more advanced. You can play a little bit harder once you get a little bit more experience under your belt. All right. So Land, how much money can I make? Oh, let's look and see. Let's come in here and delete all the trading tools in here. And we're going to just say, how much money would I have made if I would have been able to catch this one little move right here? From here, the little switch over from bullish to bearish, and this market went down, and then it switched, and I got out right there. So if I'd have got in there and got out there, because I can short the market, how much money would I have made? Well, if you'd have got in on that green dot and got out on that green dot, you'd have made $259. And how much time was that? Well, that opened up at 9:32 and closed out at 9:53. So from 31 to 50, about 20 minutes, right? Each one of those is 1 minute. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, about 20 minutes. So in about 20 minutes, you had $259. $259 times 2 would be about, $500 in an hour. Now, I know there's probably guys in this room that make $500 an hour at their normal regular job, but maybe not. $500 an hour is a lot of money. So you don't have to make every single trade. That's the point I'm trying to make here, is you don't have to take every single trade. You can sit here and wait. And I told people, I joked with them the other day, I said, I have this little program right here. I'm going to show you. Great little program. You might want to get it yourself. Okay. You come in here and it's this little program right here. If it'll come up, you see it. It's just a game. Just joking with you. But this is probably your best tool for day trading. All right. And what I do is I come in here and I'm going to click the little level 184. You can see I'm on level 184 because I do this a lot sitting here day trading. So see that? It's a little game where you've played this game where you touch the little chips and you match them up and it clears them off. So, oh, here's a 3 and here's a 3. Touch the 2 3s and it clears them off. It's just a little game that I play while I'm waiting for the market to start to trade, because trading is really about just waiting for the market to start making good trends. Once it starts making good trends, so you don't want to have to sit here and stare at the market for 6 hours. So you got to have something to do. So you sit here and play your game and look up at the market every now and again and see if it's making a good trend. If it's not, you just sit here and play your little game, or you can go do something else. But depending on how many monitors you have. But you have one sitting here with the market just kind of scrolling across it, doing its little thing. And when you start seeing, oh my gosh, like it's doing really good. Oh, something must have happened. Somebody must have talked or said something, because we have that too, right? We can come over here to our economic calendar. And like today at 8 o'clock this morning, ISM Services PMI came in. Now that made the market go crazy, right? Here's another one, 8 o'clock tomorrow, Thursday, 8 a.m., Jolt's job opening. Well, that's going to make the market go crazy. All right. 8 o'clock in the morning, Michigan consumer sentiment is going to come in. Oh, that's going to make the market go crazy. Well, this is called trading economics. All right. It's a calendar. So it tells you when all these government reports come out. So like here's retail sales month over month, Tuesday, February 10th at 6:30 in the morning, retail sales is going to come out. And when that happens, the market's going to go crazy. Well, we need crazy markets so that we can capture these nice long trends. So a lot of people like to trade these. It's a little tough sometimes. So I kind of usually try to not trade when the markets are doing this, because they sometimes go like that and they go all over the place. And that's really hard to trade. So you wait until after it's over, and then the market starts to trend, makes these beautiful trades. So you kind of, 6:30, I'm going to be wanting to trade about 7 o'clock. All right. Or 6:45. I'm going to watch and just let that first part play out. And then I'm going to expect the market to start doing some nice trends after that. So this is tradingeconomics.com/calendar. And you can come in here and you got all your settings up in here. And I like to use Impact 2. We got all of our countries in here. I clear them all out and just use the US because we're just in the US markets. And then you got to go UTC. Make sure you're on the right UTC for your time zone. Mountain time is UTC 7 right now. And so that'll get you your right timing. Make sure you get that right, because I was off one time and we were trying to trade a news event and we were off by an hour. So make sure you get that right. All right. So this is going to give you your news events, and these are what's going to move the market. Look at this, Wednesday, February 18th. Look at all these red ones. Oh my gosh, that market's going to go absolutely bonkers at that time of day. Look, 12 o'clock FOMC meeting. Oh, that's going to make the market run too, because they're going to tell you whether they're going to raise or lower interest rates. So here's another one, Friday, the February 20th. Oh, 6:30 in the morning. It's going to drive the market nuts. All right. So these are all things that you can look at that make the market go crazy. Just be careful, because sometimes it goes too crazy, and you don't like that either. You want it to just be this smooth, beautiful market. And when that happens, all you have to do is just get in right there and just ride it up. And the software is going to do the trading for you. We're going to go over and do that right now. And I'm going to show you the settings. Now, look at how crappy the market's going right now. We're going to trade anyway, even though we shouldn't be. All right. I'm going to make that very clear. I do a lot of trading in this class when we shouldn't be trading. We should be playing our little computer game. But I can't come in here and teach you if I don't trade. I have to show you how to do it. And just because I can't say, oh, well, the market's not good, so I guess I'm not going to teach you anything. No, I have to trade. I have to do it even though it's not the right time. We're going to see if we can't make some money, even though the market's being really crappy and it's not doing anything. Hopefully you can see that. You can see that like right there. Lots of topping tails, no trails, no bottom, lots of bottom tails, no trend. Just a crappy market. All right. It's just a crappy market. We don't want to trade that. Wait until it starts doing something good and nice and making some nice, beautiful trends. All right. Once it starts making these nice trends like this is where you start taking your positions. All right. And then hopefully it'll continue and make a few, and you'll make $500, $600, $1,000, and then you can stop trading, because then you're going to go through this again. Right. Because that's just what markets do. They just go sideways and make lots of crappy trades, take back everything they gave you before. And then they start going nice again, and then they try and take back everything they made before. That's just what they do. So just be mindful of that. You can't trade all day long, all the time. Right. You have to kind of pick your moments. And sometimes you don't know when those moments are. If they line up with the mathematics, or if they line up with the government reports, great, trade those. If not, you kind of just sit here and let that computer sit and draw on the charts on the screen while you do something else over here, or you sit and play a game on your little iPhone. All right, waiting for the markets to do something. So the markets aren't doing anything right now, but I'm going to come over and I'm going to show you one more setting. I'm going to come down here to the range bar chart. Now, this is a range bar 25. Now, a range bar chart, we're going to come down here and track and trade, and right click down here in the little tabs. And you can come in here and set up your range bars. You can see I've got mine set up to be a range bar 6, which means minimum moves. Now, a minimum move is the smallest increment that the market can move. And the smallest increment that the market can move is 1. So if you put in 1, that's 1 range bar. It's 1 minimum move for range bars. So 1 minimum move. And so we're going to go in, and that's just 6 minimum moves. So the market's going to have to move 6 minimum moves before it's going to give you a new price bar. Now, how long is it going to take to make 6 minimum moves? We don't know. Could be an hour, could be 2 seconds. All right, depends on how fast the market's moving. So it's a trend price bar. It's not a time price bar. So there's no time involved. That's why I love them. All right. It's not a 1-minute chart. It's not a 2-minute chart. It's not a 5-minute chart. You don't get a new bar every 5 minutes or every 1 minute. There's no timer on it that says, okay, you're going to get a new bar in 1 minute. You're going to get a new bar in 5 minutes. Nope. It's not like that. It's just going to give you a bar every time the market moves a certain distance. Then it gives you a new bar. So sometimes, like in a 1-minute chart or a 5-minute chart, you can get one great big long bar. You've seen those, right? A whole bunch of little short bars, and suddenly there's great big long bar. Well, it's only 1 bar. Well, we're using mathematical models, and we're having the computer trade for us. Well, the computer makes this decision every time it closes a bar. So if you got one big long bar, the computer doesn't make a decision to move the chart, move the order until the bar closes. And it might be a big long bar, and then it waits, and then suddenly it decides, oh, look, bar closed. It tries to get in. Okay, screws things up. So what we do is we break those big long bars up into little tiny bars, and that way the computer can look at it, and even though on a 1-minute chart it might be a big long bar, in the range bar chart, it's going to be a whole bunch of little bars, and the computer can make little decisions all along the way. It's just a way of letting the computer help you trade a little bit more efficiently. So we're going to come in here. We got range bar 6s. We've got this is a minute bar. We can come in here. Let's see. That's the way I've got the NASDAQ set up. Another range bar out here. Range bar 25, range bar 12, minute bar 15. So we're going to come in here. Let's go. The first one is range. Let's do that like this. We're going to go range bar, range bar, range bar. We're going to make the first 3 tabs. Range bar 6. We're going to do a range bar. Let's do a range bar 8. We'll do a range bar 12. Let's see, we need to make that a 12, and then we're going to make, let's even go with a range bar 25. So we'll go down here, we'll go to a range bar 25, make that a range bar, and then over here we're going to make this a minute bar. We'll make this our 1-minute bar, and then we'll make this one our 5-minute bar. All right, so this is a 5-minute bar. Now I'm going to tell you something, and this is, don't waste your time when you're scalping, looking for a little short-term trade in the markets. Don't waste your time. Did that not take? How come that didn't take? 15-minute, 2-minute, 1 minute. Oh, maybe let's just give it a second. It's queued up. Let's see what it does. All right, we'll come down here. Boy, that one's queuing up. So, oh, it did. Okay. Range bar 6, range bar 8, range bar 12, range bar 25, 1 minute, 5-minute, daily, weekly, monthly. Okay, so let's say that you're down here. Now you're going to go out and you're going to watch YouTube, and you're going to watch these other guys on YouTube trading. And that's good. That's fine. You got to get different points of view and different opinions. I know you'll always circle back around to me and you'll say, geez, that Lanturner, he knows more than everybody else anyway. I'm just going to go watch him. But I don't think that's a good idea. I think you should go watch other people. You can see what other people do, even though they're not as smart as me. All right? Just kidding. All right, so we're going to come in. And we're going to set this thing up. So now we got our charts all set up, right? We got our ATR in there. We got bulls and bears. I'm going to turn that off for now. We've got our moving averages in there. I'm going to turn that off for now even. All right. And we're going to VWAP. Let's leave that on. That's just your volume weighted average price. So that's the daily average price. The further you get out into the day, close, it's going to get flatter and flatter and flatter. Further back in time, it's going to be a little bit more, but it's going to kind of cross over that blue line, that average volume weighted average price. Think of the volume weighted average price like a rubber band. Okay, it's going to pull the market down if it's above. It's going to pull the market up if it's below. It's just going to kind of always try and go to that rubber band, all right, that blue line. So see how it goes above it, and then it pulls back, and then it comes down, and it pulls back, and then it comes down here, and it pulls back to the blue line. Just always think of it as kind of a rubber band. It's going to pull it towards it, whether it's above it or below it. It doesn't always happen, but most of the time, you can see even today, it kind of did it pretty good, pretty well. Kind of started off, and then it just kind of rotated back and forth above it. See these little yellow dots? Those are your buy signals. Those are your entry points. See that? One up for every down. And if the market's busy, like it was this time, those one ups and every down can make you a lot of money. One up for every down. Look at it. See that? One up for every down. Now, there's a whole bunch of little tiny ones in here that's going to kick your butt. You got to be careful. Be careful. Be mindful. What did we say? When the market starts to go flat like that, don't trade. Wait for it to start moving again. You're like, but Lan, I'm going to miss it. Well, you might miss the first one, but then you just trade the next one. All right? Because once it starts moving, it usually does more moves. See that? See that? From arrow to arrow. That's all we're going to do. And the reason that works is because we're in here using all this magic that I just showed you, right? The magic of the ATR signals, ATR range bars. And we're going to also use the red to green. So that's kind of a nice thing. We're going to use the Fibonacci range bar charts. So this is a Fibonacci range bar chart with the ATR laid over the top of it, which is just the average true range. It's the average true range of the market. And then you got the VWAP in here, which is just kind of an extra added icing on top. And then just realize that the average true range is just basically a mathematical natural trend line. It's a mathematical trend line. Okay, so you got the natural trend line, which is what I'm drawing here, and then you got the mathematical trend line. So you just draw a mathematical trend line between the arrows. And as long as the market's making nice sweeping moves like this, you're just going to get in here, get out there, get in here, get out there, get in here, get out there, right? And then you let your stop order to get you out kind of trail up on these little yellow dots. That's it. And now, a lot of people, when you go out and you look at these other YouTube traders and do the weave, the Donald Trump weave, we're going to circle back around to my original comment. You're going to go out and look at all these other traders, and they're going to be sitting there going, okay, now when I day trade, I start off with like the monthly chart, and I'm going to go out and look at the trend of the monthly chart so I can see where I'm at in the month. And then I'm going to go down to the weekly chart, and then I'm going to go down to the daily chart, and I'm going to draw all these lines across the weekly, monthly, daily chart. And then I'm going to go down to the 15-minute chart. I'm going to draw all these lines, the 15-minute chart of areas of support and resistance. And I'm going to go down to the 5-minute chart. And then I'm going to go down to the 1-minute chart. And I can draw all these lines. You can do that, but you know what? You're going to trade this. You're going to trade this. And what all those lines on the monthly chart have to do with what the market did for those 5 seconds has nothing to do with you. Nothing to do with you. So you're just wasting your time. All right. You're watching a video so some guy can make some money selling you advertisements. So, draw lines here and draw lines here and go see where the weekly chart is. You're looking at a range bar 6 chart. That's like, look at this. The bottom of this, 113 to 115. That's 2 minutes. Do you think the monthly chart, one price bar that represents the open, high, low, close for an entire month has anything to do with the last 2 minutes of that little green trend right there? It's got nothing to do with it. Nothing abso-fucking-lutely. Oh, sorry. Slap your mouth, Lan. It's got absolutely nothing to do with it. So to sit there and draw your lines on the weekly, monthly charts for this little tiny trend that you're going to trade down here for 2 minutes, your little scalp, it's got nothing to do with it. The only thing it has to do with is the volatility of the market. Is the market moving volatility enough to give you a big enough run that you can get your little stop order in there and capture a little bit of money over here? That's all it's got to do with it. All your lines drawn on your monthly, weekly, 15-minute chart has nothing to do with what you're doing here on the daily chart. All you're looking for is the trend. Is the trend up or down? And where is it? Is it making lots of green bars? Is it making little red bars? Lots of green bars, little red bars. Oh, now it's making short red bars, little green bars. And these little patterns that we talk about are all you're really concerned about. All right. Yes, there might be some areas in there that if you went to a 5-minute chart and drew some lines, you can see that the market's trying to head towards them. But really what we're looking for is we're just looking for a little bit of an extreme, a little bit more, just waiting for the market to move. Just wait for the market to move. You don't know how high it's going to go. So that's why you put your little trailing stop in there to trail up along behind it and just let it go until it stops out. Or you can take a little scalp off along the way. That's what we're going to do, scalp and trail, right? So this is all you really do. You don't need to go out to a monthly chart and look at the lines of the support and resistance lines of a monthly chart when you're going to be scalping a little tiny 2 minutes on a range bar 6 time frame. It's just ridiculous. You don't need to do that. Now, does that stuff make sense if you're going to do long-term position trading? What a lot of these guys out there misinformation called swing trading. Swing trading can be done on a range bar 6. Swing trading just means you're going to buy every bicycle, sell every, you're going to swing trade back and forth, up and down, long, short, long, short, long, short. That's what swing trading is. A lot of people miscommunicate that and say swing trading. Swing trading is really, they use that term incorrectly as if it's an investment, a long-term hold. You're going to hold the market for a long period of time. You're a position trader. You're going to take a position. You're going to hold it for a long period of time, maybe on a daily chart. And you can then at that point, doing those trend lines and stuff, you're trying to find the delta cone of probability. That's really what they're doing with all those areas of support and resistance, those lines they're drawing. They're trying to find the area but they don't really know that's what they're doing. Okay. They don't know that's what they're doing. They just know they've got areas of support and resistance. And this is where markets have a tendency to repeat and go back. Why? They don't know. They just know that it's done it sometimes and they can see it in charts. So they'll draw their trend lines, but they don't know what the delta cone of probability is. So they don't really know what they're doing. They're just putting lines on there. Okay. If you put enough lines on your chart, eventually the market will hit it and you can say that your system worked. That's what they're doing. All right. Oh, if I put a lot of lines on the market, then the market will eventually hit one and I can say my system worked. Okay. Well, do that then. All right. So here we go. We're looking for the delta cone of probability on those longer term trades. But when we're doing this kind of stuff, all we're looking for is little ABCD patterns, just little ABCD patterns. All right. And we have a little tool here that highlights those. You're going to come in here, A, right, B, C, D. That's what we're really looking for. We're looking for markets that are making little ABCD patterns. And that's what we want to see. When a market's doing that, that's what you want to trade, those little patterns. And so I have those little patterns. They're in the book. All right, I'm going to show you real quick here. If you come over to the Fibonacci book, again, this is the book that's out on Amazon. It's got all these little patterns in here that shows you where the little breaking points are and what to look for and what to watch for. So this is what we do. See, it's just draw your trend lines. It's right in the book, what I just showed you there. See that? See how you do this? The little blue lights in there, they all kind of show you where the little buys and sells are. Okay, that's where all these little patterns are. So this is what we're looking for. But really, when it comes down to it, just keep it really super simple. Just keep it really super simple. You're looking for little ABCD patterns. And if the market's not making little ABCD patterns, don't trade. Go play your little chart game. All right, go play your little what are those things? I don't know, that little game. Go play your little game. So that's what we're looking for. We're just looking for little ABCs. Don't worry about going out there and drawing all the support and resistance. You can use the VWAP because the VWAP's kind of, it does work on the market. Again, just use it as like a rubber band. Market likes to just kind of bounce back and forth across the VWAP. All right. So the ATR, the stop factor is important to us. We're going to come in here and the market's going to close in 2 minutes. We got to do some trading here. So let's come down here. I'm going to show you the trade. Now I'm going to go minus. I'm going to take 2 of these off in track and trade because we're just going to work with these first 2. So the first 2, I'm going to come in here and I'm going to show you the settings. 1 scalp market buy. This is number 1. So this is my number 1 strategy right here. There's the settings. Go set your computer up to do this. Take your little picture. All right. And we're going to do the same thing with this one. Number 2, scalp market sell. Okay. So this is the sell. This is the buy. Take a picture. All right, now we're going to come in here, and if the market's moving and you want to get in, you can just hit sell for the downside or buy for the upside. So if we think the market's going to continue down, we just hit this button right here, and all we have to do is just hit that one button. If you got it set up like that, it's going to automatically set your stop. It's automatically going to get you in. It's automatically going to set a limit order to take profits, just like that. All right. Now the market's turning around, going back up. So we'll just let it go. And it'll stop us out if it hits the little yellow dots. It's going to stop us out. It's going to limit us out and take our profits going the other way. Now we're going to go up. So we can wait and see. If it's going to flip to the other side, we could take a little arrow. We'll just wait for the little arrow. Just trade the arrows, man. Just trade the arrows. Okay, so if it gives us a buy arrow, then the market's going to close in 2 minutes. Doggone it. We should have been started trading right here. When was that? 130. We could have traded all through there and made all that money. I was going to show you how much money you could make. Let's go draw this. From this little arrow, let's say we got in there and we just rode that all the way down, probably to get stopped out right about there. $240. Well, how much money did you have to put in to make that much money, Lan? Well, you had to come in here to the key, and you can see that we're day trading. So your day margin on here is $627. So if you're going to trade, this is the Russell. So if you're going to trade the Russell, $627 is all you have to have. Oh, Lan, you missed it. You just got the arrow. Go put it in there. So you can come in there and buy just like that. That's all you do. And it automatically does it for you. It automatically sets the orders in there, starts to trail. We got stopped out. The market didn't make a big long green move because the market just closed. All right. So now the market's going to be dead because it's in the after hours. So I talked too much and we didn't get any trades off. But at least you got all the settings and you got all the understanding. You got all the concepts. The ATR in here. Stop factor. If you want to make your stop closer, so it's not taking as big a risk, you just make that smaller. And see, it makes the dots closer like that, and it brings your arrows in. Or you can just go up and make it bigger like this. So you just make it bigger like that, and then it pushes it out a little bit. But the best place for me is the stop factor. I like to start out at 101. We start out at 101, and then if the market's really moving and pumping, you can make those tighter. You can tighten them up, like go down to 6, sometimes 6, 5 even. You go down to 5. Not very often you go down to 5 because that's really tight. That means the market's really making beautiful trends. But you can go, usually I like to have it on 6 or 7. 6, 7, kind of the midpoint between 5 and 7, right? 7's like a little bit up, not. But if the market's not making good trends at 6 and 7, let's put it on 7. If you can't make money at 7 because it keeps stopping it out, don't trade. It's kind of your little filter. It's like, well, if I'm not getting good stop, if my trend can't stay in there at 7, don't trade. Just wait. Okay. You can go back it out to 8. That gives you a little bit more buffer. You stay in a little bit longer. Oh, look, that market, we should have just put that order in. Whenever you get an arrow, you don't have to wait for the arrows, though. You can wait for the little red to green. See the little red to green right here? Let's blow this up so we can see a little bit better. It's so tiny. I like it tiny when I trade because it's less intimidating. Okay, see this? There's no arrow. This was the arrow, but we got the little red to green anyway because it rallied through 3 bars. It was real common. You get the arrow and it goes up, but then it flushes right back down, stops everybody out, and then turns and takes off like a rocket ship. Does it all the time. So just be mindful of that. If that happens to you, you take the arrow and it gets stopped out, and then it goes the first red to green right there, a little red to green again. You just get back in again. Okay, so you take a little tiny loss. That's why we get out, because we don't know where the market's going to go. And if it just goes and turns against you, you're going to get right back out, so you don't lose very much. Because you have to have your winners pay for your losers. Okay, so you just kind of have to sit here and wait. Now, this is a range bar 6, so it's moving kind of fast. And if that's too fast, that's why I was saying we set this up so we can have range bar 6. We can come in here. We can go to a range bar 8 to slow it down a little bit, right? So it's not moving so fast. But then you have to adjust your ATR. So now it's not moving quite so fast. It has to move 8 minimum moves before and I hate this little auto scale thing that comes on. So I turn that off. And you can just hit that like that. There you go. And it automatically sets your orders in there. There's your buy market. There's your stop automatically set. And then there's your market. And if it goes up and hits that one, that's your scalp. Let's put a trail in there. So we put a second one, and then we grab this, and we can grab one of these and bring it way up there. And now the market's going to go those 2 limit orders. Now it's going to just trail up. So that was our first scalp, gave us a nice little chunk of money, and now it's going to trail. And as long as it stays in there, the computer's just going to trade it all the way up until the market hits that limit order. Now, if you want it to go higher than that limit order, you just move it. Or if you want it to go down, you just grab it and pull it down and get out wherever you want to get out. But right now, we've got a nice little trend, and you can see the little trailing stops come up as far as, well, where we got in, which is the break-even point. There we go. Now it's moving a little higher. Now we're up $110. And we were down 70. If we wanted to, we just go, boop, take it off just like that. Exit chart. We're up $25. We won back all the money we lost. So the name of the game is to get back the money you lost. And then when the market starts to trade again, just go pop it in there again and start making money. I like to get my money back. I have get back-itis. So I get my money back. And then when it starts to go, you can start from a point of profit instead of a point of negativity. So I like to, once I get enough money to get out, I just hit the exit chart, take the money, get back to green, and then wait for the next signal and trade again. Now, again, the best thing to do is to not always be trading. It's to kind of sit and play your little game until you see a good signal. We're just going to sit here and play our little game, wait until we get a good signal. Lan's just waiting for a good signal to come on. So he's just playing his little tile game, right? You see my little tile game? I love my little tile game. It's a lot of fun. And that's what I do. I just sit here and play this little tile game while I'm day trading, waiting for the market to give me a signal. When I kind of peep up there, this kind of just distracts me, so I'm not so nervous about the market all the time. Just I'm feeling bad. I took my profits off. Look how much money we could have made if we'd have just stayed in. But I took my profits off, and that's okay. We'll just wait for another opportunity. Market's moving. We're going to wait for another opportunity. I'm going to play my little game here. Oh, look, it's starting to do something. Maybe we'll do something right here. Let's see what it's going to do. Going to give us an arrow one way or the other? No. Well, maybe it's going to come down. Oh, it looks like it wants to go back up. First green candle make a new high. There we go. We're just going to take that. Let's try and get a little scalp. See if it won't go up there and give us a little bit of money. Oh, no, just stopped us out. Now we got to see if it's going to go short. It's going to go short. I don't trust it. I don't trust it. Do you trust it, Land? No, I don't trust it. We're going to try it, though. We're going to see. Maybe. Okay, it's maybe going to drop. We'll see. We'll put our order in there. If it doesn't, we'll just get back out again. Now, the market's closed, so this is the after hours trading. And you can trade after hours on the futures market, and you see it's going to be dead. So now we're going to go back and trade our game again. Just play our game till the market starts to move again, which it's after hours, so it's probably, we got a couple of nice moves there in the after hours, though. You can't complain about that. Let's wait for an arrow. We didn't get an arrow. Let's wait for an arrow. How come there's no arrows? Where'd my arrows go? Let's turn the arrows on. Oh, there's our arrow. Okay, here we go. We'll try again. We'll do two of them. I'm going to do a scalp and a trail. So now I'm going to bring this one down here. Let's see if it wants to go farther. All right. And that's all you do. Now you sit here, and while it's doing that, you play your game. Or if you want to, you can get all upset and sit here and stab your little voodoo guy. Go down, go down, go down, go down. And we can't make, this is all the power I've got to make the market move. So this is what I do, try to make the market move. Since I can't make the market move, I just sit here and play my game while I go. Because the computer's going to trade at this point. All right, I decided to get in, so, but now I turned it over to the computer. I don't have to do anything. Just sit here and play my game. Come on, touch it, touch it. Okay, we just got that scalp. So that just closed out a position for us. See our closed position over here. That just made us $57. Now we're in the market, we're short. And as long as the market keeps falling, see, now we're up 140, 155. Last time we got out because we were down 52, right? So we wanted to cover our 52. We're up 175. This time it's still making good money. I like to watch this little tiny chart up here in the upper right-hand corner. See that? As soon as that starts to pull back, I'll sometimes just hit exit chart and take my profits there. But it's moving good. So we're up $230, $250, $260. That's nice. If it comes down here and touches it, I'm going to suck this in a little bit. Oh, it's coming back. Oh, there we took it off. So now we're up $152. We just made $200. Now we're going to sit here and play our game a little bit more. That's it. Can you guys do that? Can you guys do that? I can't do that, Land. That you just talked for a whole hour to tell us how to do it. Yeah, but I just told you everything. I just told you everything. Watch this video like 10 times. Get your software, set it up, and practice. And then make sure you get this little game so that you can know what to do in between times when the market's not giving you signals to trade. All right. So you have something to do. Get this little game. And then you just sit here and wait for the greens to reds, wait for the little arrows. My settings right here, this one here, I put on 0.7, 1 and 0.7. And I have Fibonacci. I have range bar. This one here is range bar 8 on the Russell 2000 in the futures market. And all I have to do is have in here key day margin. I only have to have $627 in my account to do what I just did. And on that last trade, we made $205. The previous one, we made $57. And we last a couple of times. That's all right. Our winner paid for our loser. We're up $152. That's it. That's all there is to it. Try it again. It starts to fall again. Just put another order in there. If it doesn't keep falling, it just gets out real fast. That's just the scalp. There's no trail on this one. There's just the scalp. So we'll see if it'll go down far enough to just give us the scalp, which is about, what did we say? About $57, about what that's set at. Oh, it's coming back. Come on, go down just enough to, there we go. Just made another $50. All right, so that's $202 now. Now we're up $202 with $50. See that? Now you have to pay commissions and fees out of this too, so don't forget that, depending on what your commissions and fees are. But they're on the mini account. This is a mini. That's relatively small. They're a couple bucks, 5 in, 5 out, or something. All right, we got an up arrow, but the market's down. I don't know if I want to take an up arrow when the market's down. I'll wait. What I do is, if the market lost at red, green, might just be a counter trend. Counter trends, remember, are generally short, and then the market turns and makes a big long red again. So at this point, I'm like, I don't really want to. Oh, but I'll take that one. It's a little slow to the punch, so we might just get a little bounce back up again. Come on, flush out for me. No, not going to happen. All right, we're giving money back, $85. We're up green. Let's stop. All right, we're going to quit green. We always want to quit green. Okay, once you're green, quit. Or walk away, go do something else, come back later and try again if that's what you want to do. All right, we made $117 today. That's pretty good wages for an hour of work. And I'm going to call that quits. If you guys have any questions, please let me know. And if you want to talk to me, you can always go over to my visit landturner.com. There's a button there. Click it. And you can come and I'll help you set up your software and help you get started on this. Go get your download your software and say, well, Land, I didn't quite understand how to set up all your software the way you said. I'll come and help you. Just sign up for a little bull session and we'll talk. And then if you need some help setting up your software, we'll set you up an appointment that you can come and I'll help you. All right. So go to landturner.com and I'll help you trade. All right. And then don't forget.
Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures. This is the website, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, that's it. That's all I got for you today. Kirk, I see you made a bunch of comments in there. I apologize I didn't have my screen up, so I didn't see those coming through. A couple of you guys had comments, but good for you guys. I appreciate you coming by and hanging out with me, and we're going to let you go, and we'll see you guys tomorrow morning at, no class the rest of this week. We're done for the week. Next class will be next Tuesday morning at 9 o'clock in the morning here. We're going to start our class next Monday at the university, and then Tuesday will be the lab. So no class tomorrow, no class on Friday. We might do it on Friday. We'll have to wait and see. Check. Make sure you subscribe to the channel so that you know that you're subscribed to the channel. Then you'll get notified if I do a class on Friday. We might do a class on Friday because there's a lot of things happening in the stock market. We got to go look at our accounts. All right. So we'll see you then. Bye-bye.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.